Good afternoon and welcome to our webinar. My name is Donna Stowell. I'm a partner here at Brinker Simpson. I oversee our outsourced accounting and fraud and forensic practice. Joining me today are Bob Simpson, managing partner, and Andrew Bisowski, who is a certified fraud examiner and a financial analyst on my team. The webinar is presented today in partnership with the Delaware County Chamber of Commerce. Our goal is to educate you on fraud in the workplace and provide best practices for business owners and managers to prevent fraud in your business. Andrew will provide an overview of occupational fraud and statistics provided by the ACFE 2020 report to nations. Bob and I will review fraud cases that have been in the headlines as well as our own experiences. Time permitting, we'll have a question and answer at the end of the webinar. So thank you, Andrew, for presenting with us today.
All right, thank you, Donna. I am going to get into a brief overview of our agenda in today's webinar. So we are going to start off by discussing occupational fraud in the workplace and cover the fraud tree. We'll talk about fraud tree examples, as well as some fraud in small business, departments that pose the greatest risk to commit occupational fraud. We'll answer the question of why employees steal. We'll discuss some stories from the headlines, local cases of theft and fraud and how those could have been prevented. We'll talk about how we can protect your business from fraud, and then get into a Q&A session. So let's get into it by beginning with the discussion of occupational fraud and how it is committed. So occupational fraud is committed through one of three branches of the fraud tree, which are asset misappropriation, corruption, and financial statement fraud. Today's presentation will focus primarily on asset misappropriation, which is the most common type of occupational fraud in terms of the percentage of cases. As you can see, we have a graphic here to the right displaying occupational fraud cases, and 86% of all occupational frauds involve some type of asset misappropriation, which is defined as an employee stealing or misusing the employing organization's resources. Although asset misappropriation is the most common type of occupational fraud, it's actually the least damaging in terms of median loss. Financial statement fraud is the most damaging at $954,000 in median loss. However, it occurs the least amount of times at only 10% of cases. Corruption, meanwhile, is in the middle in terms of percentage of cases and median loss, and is defined as dishonest or fraudulent conduct by those in power, typically involving bribery. So here we have a diagram of the fraud tree. As you can see, asset misappropriation is pretty dominant with all the sub-schemes. There's a lot to look out for in terms of asset misappropriation here. I wanted to kind of just go over a couple examples of different sub-schemes of asset misappropriation. One is a receivables scheme, the other is a payroll scheme. So the receivables sub-scheme I wanted to discuss today is lapping, which is defined as a fraudulent practice that involves altering accounts receivable to hide stolen cash. The method involves taking a subsequent receivables payment from a transaction, such as a sale, and using that to cover the theft. The receivable from the second transaction is covered by money from the third transaction, and so on. So a quick little example of this, say you received a $100 payment and the clerk rewired that to their own personal account. Then payment number two comes in, say in the amount of $200. They would take $100 from that second payment and apply it to the first open invoice to close that out, then apply the remaining portion to the second receivable. Third payment comes in, same thing. They take a portion of that payment, apply it to the second invoice to close that out, and a portion to the third, and so on and so forth. So you can see how if no one's paying attention, if no one's looking, a scheme like this could easily be pulled off and kind of buried. So it's important to really know your customers, know your vendors, know your processes take a look at these things on a consistent basis, because if not, it's easy for something to happen. So the second type of asset misappropriation sub-scheme I wanted to cover today is a payroll scheme called ghost employee scheme. This is when someone is added to the payroll who doesn't work for the company. It can be a fictitious or a real person, and paychecks or direct deposits are generated to the ghost. So 4 things that have to happen in order for a ghost employee scheme to work. Number 1, the ghost is added to the payroll. Number 2, timekeeping and wage rate information is collected. Number 3, a paycheck is issued to the ghost. And number 4, the check is delivered to the perpetrator or accomplice. So in the case that it's a fictitious person, the payroll person could easily add a fake employee to the payroll, enter in their own banking information, have direct deposits sent directly to that fictitious employee. If it's actually a real person, a check or same thing, a direct deposit could be generated to that individual. It's typically a friend or a family member of the perpetrator, and then they split up the proceeds from there. So once again, it's important to really look at your payroll records, look at your payroll registers, every payroll, or at least monthly, quarterly. Really have an eye on that, because it's easy for a perpetrator to slide in a fake employee and pull a scheme like this, and it could go on for a long time if no one's looking and checking for it. So let's talk about fraud in small businesses and how that could impact. I'm sure many of you on this webinar are small business owners. So how does fraud affect you? Well, 26% of all occupational fraud cases occur in organizations with fewer than 100 employees, and can result in a median loss of $150,000. These schemes typically go on for 14 months on average. So even in small business, schemes can be drawn out for a long time, and you can lose a lot of money. The most common types of fraud in small business are corruption, billing schemes, check and payment tampering. Many of you may use QuickBooks to do your accounting. We've seen a few examples in the past of how easy it is to tamper with checks in QuickBooks. An individual can handwrite a check to themselves and easily enter a check in QuickBooks to a legitimate vendor. So again, if there aren't internal controls in place, if you're not reviewing canceled checks, doing things along these lines, segregating duties to stop incidents like this, it's possible for schemes to go on for a very long time undetected. And the top 3 reasons why small businesses are so susceptible to fraud are resource limitations, lack of awareness, and placing too much trust in employees. Oftentimes they've worked for you for a very long time and have gained your trust. We're certainly not suggesting to never trust anyone that you work with, but as Donna likes to say, and you'll hear later on in this presentation, it's important to trust but verify. Just kind of have processes in place, internal controls, keep an eye on reports, make sure nothing fishy is happening. So next up, we will talk about departments that pose the greatest risk to commit occupational fraud. And off here to the right, you'll see a heat map of the x-axis is the percentage of cases of occupational fraud, and the y-axis is the median loss incurred. So the top 4 departments that pose the highest risk to commit occupational fraud are operations, accounting, executive or upper management, and sales. So typically departments and individuals that have access to information, banking info, accounting software, decision makers that really know the business inside and out. And the longer a perpetrator works for a company, the more damage their scheme is likely to cause, which makes sense. They know the tendencies, they know the holes, they know any segregation of duties or lack of internal controls that they could take advantage of. Employees with greater than 10 years of tenure, their schemes result in the highest median losses. With that, I will kick it back over to Donna to talk about why employees steal.
Thank you, Andrew. So before we get into review some of the cases, let's discuss why employees steal. Donald Cressy, back in 1940, developed a model. He was doing his PhD in criminology at Indiana University and was very interested in why people embezzle. And through his research, he developed the model, which later became known as the fraud triangle. So this kind of gives you a reason as to why people steal. Financial pressure. Sometimes there's a need because they have a personal debt, or they have gambling or other addiction problems, or they're living beyond their means and they want a lavish lifestyle. My experience thus far working in fraud, most of the times it's because the person is living beyond their means and they want this lavish lifestyle. So they use their employer's resources to fund their lifestyle. They have the opportunity. The person has the ability, they believe they have the ability to commit fraud without being caught. And again, we're going to give you some ideas on how you can help prevent fraud and negate these opportunities for people to commit. And then rationalization. Sometimes a fraudster, they plan to steal the money. They're like, I'm just going to borrow this money, but then I'll give it back. Or you know what, they don't pay me enough money to work here anyway, so this money is due to me, or this benefit is due to me. I shouldn't have to pay for it. So they justified their action. A lot of current professionals believe there's a new breed of occupational offender, and that's one who simply lacks a conscience to overcome temptation. And I tend to agree with this because a lot of times what I found in the cases that I've worked on is people don't really care about, they don't have a financial pressure, they don't have a debt, or they're not dealing with addiction problems. They just can't resist the temptation to steal and fund their lifestyle. So we have a couple of cases that really we ripped from the headlines, and I will tell you, I don't know if you can see this, but Bob put this in my mailbox not that long ago, and it was about an Ardmore bookkeeper who stole $394,000. And what did she do? She spent it on vacations, sports games, plastic surgery. Another case, which we're going to dive into a little bit, was a recent case also, where a Chesterbrook woman stole $393,000 from her Plymouth Meeting business. And for those of us who are in the area, we're well aware of the woman who embezzled over $3 million from a Chester County township. Back in 2014, and this was a case that always interested me, there was a Chester County woman who embezzled $1 million from her Berwyn firm, and we'll talk a little bit about this. And going all the way back to 2003, there was a Blue Cross executive who actually got a prison term, and I personally met him. He interviewed for a job at a client, and he got a prison term and a fine, and he stole $7 million. So if you Google these cases on the internet, you'll find more details about them. So let's talk about the Chesterbrook woman who stole $393,000 from the Plymouth Meeting business. So according to the article that was published in the Mercury, the theft occurred over a period of 4.5 years. The woman only worked for the company less than 5, so she started stealing almost immediately. And what did she use the money for? To finance her lifestyle. So she did it through payroll, she did it through fraudulent disbursements, and she did it from forging checks. She was in a position of trust. She was the controller. And so what could the company have done to prevent the theft? I mean, it's always easy to be the Monday morning quarterback, but there are a few steps that people can take to possibly prevent the theft in their business. And the first starts with internal controls. A lot of small business owners will tell us, well, we don't have enough people to segregate duties. We don't know what we can do to improve our internal controls. There's always something. I will tell you, there's always something that you can do to enhance your internal controls. And one of the things that I will tell business owners, I know you're busy, you're doing 50 million things, but spend 2 hours a month and look at your financials. Review your bank statements. Request canceled checks. If you're not getting your bank statements online with copies of the canceled checks, ask your bank for them, and they'll say, well, we charge a $5 fee. I will tell you that $5 fee is worth it, because if you 2 years down the road, you suspect fraud and you need to go back and get those canceled checks, the banks are going to charge you money. We recently worked on a client, it was a very small client, who suspected there was some fraud going on in their business. And we wanted to get copies of the canceled checks, and it was going to be quite a substantial sum of money to go back 3 years and get these checks. And it really wasn't worth it in the scheme of what the potential fraud was. So I tell clients all the time, make sure you get your canceled checks, make sure you're reviewing your bank statements, understand the transactions. I don't care if you trust your controller to the moon and back. It's so important to trust but verify. Also for payroll, look at your payroll. Many companies, they know all their employees, so they can look at their payroll and they can see, yes, this person is making the correct amount of money, et cetera. You especially want to look and make sure there's no employees on there that shouldn't be on there, and that the person who's processing the payroll is getting paid the correct amount of money. In this case here, the woman actually, when the commissions were being paid, would add a commission check for herself, or she would change her salary. And the one thing that you can do and request from your payroll companies that's really important, and I tell clients to do this as well, it's something called a payroll change report. Most payroll companies can run this. And what it does, it'll tell you in that payroll what changed. And it might just be like a one-page summation of what changed that payroll. You'll see if somebody's bank account changed, if somebody's added an employee, a terminated employee, things like that. It'll tell you any change on that report, a rate change, a salary change. And it's very important, even if you review it monthly, to get this report from your payroll company and to review it. And then also do a financial review. Sit with your accountant, go through your budgets, look at prior year comparisons. Be inquisitive. I always tell people, be inquisitive. Ask the why. Why is this different? Why is this higher? So you understand every number on your financials. And like I said, your accountants can always help you go through this. Another case that was in the headlines was the woman who embezzled $3 million from Chester County Township. Now, she worked for the township for almost 20 years, I believe, and the theft had gone on for over a period of 7 years. And again, she used the money to furnish a lavish lifestyle. Again, she was in a position of trust, and she had unauthorized payroll expenditures. She paid credit card bills. She personally used her credit card. She forged checks and documents. And the township found out actually from the Capital One fraud department, who questioned a bank transfer. So if it wasn't for Capital One's fraud department, this could have gone on for additional time. So it's really important, again, to make sure you're reviewing your internal controls, no matter what your business is, whether you're a municipality, a privately held business, a publicly held business, a business of 10 people, a business of 100 people. You need to make sure that you have internal controls in place. And again, that's something that you can hire an accountant and consultant to help you establish. Again, review the bank statement. Somebody else in that company, in that township, should have been looking at those bank statements and requesting the canceled check. She was the township manager. She had a lot of authority, and there was a stamp for one of the signatures. So the checks required 2 signatures. Well, the one signature was a stamped signature of one of the supervisors. So it was very easy for her to forge the signatures. Again, they could have, asked for a payroll change report. Somebody else should have been reviewing the payroll. This township actually had an audit performed. And this is, a lot of times businesses think, well, I have an audit. Well, financial audits do not always catch fraud. So you need to really think about, how can somebody commit fraud and what can we do better to prevent it? And then here's another case where this one was interesting, because this woman actually embezzled $1 million from the Berwyn firm. And what she did was she had a position in human resources. She might have been a director level at this company. And she set up her own business, which was a benefit consulting business. And she actually would bill the company from her business that she set up, and she would approve the invoice. And then she would send it through accounts payable. Well, nobody questioned it because she approved it and she had the authorization to approve it. So how could the company have prevented this fraud? And again, it's easy to be the Monday morning quarterback. But in this case, I think one of the most important things here would to have been empower your accounts payable department, train them to question. There should have been some type of purchase order process in place. This company was a pretty decent size from what I remember. And if you have a purchasing process in place where there's purchase orders being issued and somebody else is signing off on that purchase and questioning that purchase, then it might help prevent this type of fraud. And also know your vendors, know what they're doing in your business. If you have an invoice, and this happened really at Blue Cross, where they had invoices for large amounts of money for these repairs and maintenances, and they just signed off on them. They thought they were normal expenditures. They really didn't question it. And I would say you need to question, know your vendors, know what they're providing, know what the cost should be. And then again, having good internal controls in place will really help you to get through to prevent fraud in the workplace. So I know Bob has some stories that he's experienced, and all of these cases that we've talked about, we've experienced with our clients that we've helped. So they're all pretty usually the same MO. They're in a position of trust. They had the ability to issue payroll, issue checks, and there really was no oversight or strong internal controls to help prevent it. So I know Bob has a couple war stories.
Thanks, Donna. Yeah, 40 years will get you some war stories for sure. And some of the things that Donna and Andrew had said are all very common circumstances with some of the cases that I've been involved in. And sadly, those cases are thefts and embezzlements from my clients who had internal situations occur that ranged anywhere from small amount of money to hundreds of thousands of dollars in a couple of cases, where their trusted employees were the embezzlers and they were given the opportunity to steal. And I always like the definition of a thief, and a thief is somebody who steals when he's given the opportunity to do so. So I'm not saying everybody's a thief, but certain people are thieves. There's no line drawn. If you steal, you steal. You really don't know how to prevent that in the early stages of companies. Most of my clients that are generational companies from me began as small, very small businesses that might have brought in a part-time bookkeeper to take care of the accounting needs of the company, and really brought them in and trusted them implicitly. Like I trust my controller in the firm that we're in. And in certain circumstances, that trust certainly was misplaced. So a couple of cases, one I want to talk about was a client of mine who was a used car sales company in media, and they had a very capable bookkeeper in the company who did all of the work, simply did all the work. It was a $10 million or $12 million company. She cut the checks, she made the bank deposits, she paid the taxes, she opened the mail. And then each week she would give cash reports to the owners. And each month she would give financial reports to the owners and sometimes to us as their accountants. We were never engaged to do any type of audit or review work for them. We were simply tax accountants at the time and doing tax planning for them. And then if things came along like bank financing and areas like that, we would be called in. But we never really had any oversight into their financial operations. The interesting part of this fraud and theft was that they used QuickBooks accounting. It was a few years ago before QuickBooks had a few of the bells and whistles that it has now. And she had the ability to print the checks. She had the ability to write the checks in the computer software. She was paying the sales tax, Pennsylvania Department of Revenue. It averaged about $10,000 to $12,000 a month. She would write the checks in the computer software to the Pennsylvania Department of Revenue, but then when she went to print the check, she would change the name on the check to her own. And she would print the exact check to herself. So if the accountant came in and looked at it, or if the owners came in and looked at the QuickBooks reports, they saw that the Pennsylvania Department of Revenue was paid $11,333.18. Bank statements came back, but without the checks, only came back with a list of the checks. So if you looked at the bank statement, you saw that check for that exact amount. The thing that was happening was, after about 9 months of this and over 100,000, Pennsylvania Department of Revenue started to send notices that said, hey, your sales tax payments aren't made. Of course, she answered the mail. So she took those notices and would shred them and continue this fraud for about 16 months. She deposited her checks in the same bank that the company banked at. So when she made bank deposits for the bank, she would make bank deposits for herself. How she got caught is a really interesting story. One day, the owner of the company was at the bank, and the teller at the bank asked him if there were any openings in his company that she would love to come to work for him. And he asked her, why would you want to come work for us? We're a used car company. And she said, because of your bonus and commission program that, I won't name the name, gets to enjoy with all of her bonus checks. And he looked at her and he said, what kind of bonus checks would they be? And the young woman who was the teller immediately knew that there was a problem and brought out the bank manager, and they went in and investigated these checks and found the cash check and realized that those checks had been written to the employee. The employee was arrested. She was prosecuted. And the bad part about it was the money that they had paid her, they still owed to the state of Pennsylvania with penalties, with interest, in order to get their sales tax paid. She was forced to make payments on the outstanding balance. And as of a couple of years ago, I think she paid about $300 of what was $180,000 theft back to them. So the company got banged for the 180, and then they had to pay the sales tax. Again, it could have been caught with all of the items that Donna and Andrew had said that need to be in a small business. Got to look at the bank statements. You got to ask questions. You got to segregate your duties if you can. Make the owners of the company open the mail, not the bookkeeper who's paying the bills. If they had done those things, they would have detected that very quickly. Another case turned out to be about a $300,000 theft for a group of doctors that were clients of ours that ran a pretty successful practice in Delaware County. There were 9 owners of this practice, and each one of the doctors took payroll of about $400,000 a year in biweekly paychecks. And all of the paychecks were relatively about the same amount. And then additionally, we would do tax planning for them. And if there was more bonuses to be taken by the doctors, the company would pay more bonus money to them. So their controller, who had been there for 20 years, was very adept at the job. The books were very neat, very clean. There was never any suspicion of misappropriation of money or theft. And what had happened in there was every other month, 3 or 4 of the doctors would get an extra paycheck. And these were significant checks. And then the month after that, or the 2 months after that, the other 4 or 5 doctors would get an extra paycheck. And these paychecks were being wired into bank accounts where on the stub or on the report, the bank account was X'd out except for the last 3 digits of the bank account. Now nobody would have ever thought to go in and check to see where these checks were being sent, because the story was that the doctors were taking bonus checks and that by the end of the year, everything would be equal. That sounded like a very good story to me. I didn't have any reason to question that to the controller who had been there for 20 years. It sounded very logical. What nobody did until it was too late was go check to see where those checks were being wired, what bank accounts they were being wired into. And the interesting thing was not all of these doctors banked at the same bank. And what this controller had done was go to the banks where the doctors did bank and open up accounts in her name at those banks. And there were six different banks where she had established accounts in her name and would have these paychecks wired to the bank, but in a different account number that became her account number. Took a long time to find out this problem, because in meeting with the owners, it was never an issue because everybody would be equal. All the doctors' payroll would be equal. In a meeting with one of the doctors one day, I made a comment that I thought the bonuses that they were taking might have been a little bit too aggressive and might throw the profit down to a lower number. And the doctor, who was the president of the corporation, looked at me and said, "Which bonuses are they?" So we went back and we recreated and we got the payroll records, and we found out at the time that it was close to $300,000 of duplicated payrolls that were sent to these doctors' accounts. Again, the woman who ran this was arrested, and then she came back and she made some threats to the practice. Her restitution was probably less than $1,000 in that practice. A very sad situation, because it eventually led to the breakup of the business because of the infighting of the physicians in that group. We had a client that sadly had entrusted their controller, office manager / woman that did everything, I guess you call them, and she was able to manipulate the company into redirecting customer checks into bank account that she controlled in very, very small amounts. This was a computer company. It had 7 employees, did about $2.5 to $3 million a year in business, sold equipment, and provided some IT services to small businesses. Some of the payments were very small, and it seemed like small payments were being redirected. This was something that actually nobody ever found out until it was way too late. But she had systematically taken about $25,000 a year for 20 years, which of course amounts to $500,000 taken from this company, where she became the best friends of the owner and his wife. Her and her husband became the best friends of the owners, and the owners watched her children go through college and watched them take vacations and watched them buy new cars, but they didn't do anything that was so obvious that it would raise any suspicion. They did it very small, but they were able to finance the tuition for their children to go to college on the owner's dime. Didn't cost them any money. Certainly was a terrible situation at the end, and she actually came and admitted that she had been systematically stealing this money out. And again, there was no oversight. Nobody paid attention. Nobody looked at bank statements because you're busy. They were busy in their daily work, and of course, they trusted her as a part of her family. One more. Do you want me to do one more?
Yeah, sure.
I don't know how much time we got.
Yeah.
A little bit of time. So we got called into a pretty significant medical practice years back, and they were looking to hire a CPA firm to do a audit of their financial statements, which they had never had done before. And we were working with a couple of the physicians that were in this group individually, and I think there were 25 physicians in the group at the time, and we worked for 2 or 3 of them. So we were brought in as one of the bidders for this work, and we bid the work against a couple of other accounting firms, one of them being that was their current accounting firm. And we got the work. Eventually we got the work. So our first job was to come in at the end of the year and do the audit of their financial statements. And the company had a set of financial statements. Again, they used QuickBooks at the time, QuickBooks Online, and their statements were they were in very good shape, and they were very profitable, and everything looked fine. They had plenty of money in the bank. Their bills were paid. They had no debts. So it looked like, on the surface, a very profitable company that had tremendous cash flow. So there's the opportunity to steal right there. You have some very significant cash flow, 7-figure cash flow. That's an opportunity. The controller for the company was a CPA, MBA, came from a hospital system, and had a great pedigree and a great resume. And I'm assuming they questioned him and looked at his background when they brought him in. What he did from the week he joined this group was begin the systematic theft of their funds. He had a perfect double set of books, ones that he showed the doctors and the accountants, and ones that he kept for himself, because we found both sets. In the beginning, we went in and we started our audit work, and we had a tip from the very beginning when the first thing we asked for were copies of their bank statements, which is where we're going to start with cash and work our way down. And after 2 or 3 or even 4 requests of the bank statements from the controller, we went to him and we said, listen, we're either going to get them from you or we're going to go to the bank, and we're going to get them from the bank. And we went to they had a COO, a chief operating officer in the company, and she was very experienced with large medical practices. And we went to her, we asked her if she had copies of the bank statements, and she kind of surprised us when she said, no, I don't see the bank statements. They're electronic. And I said, well, do you have access to the bank statements? Do you know what's going on with the finances of the company? And she said, no, I don't. I handle the operations. He handles the finances. So we said to her, he won't give us copies of the bank statements. So she goes to the bank and she gets a copy of the last bank statement and brings it to us. And on that bank statement, it had a balance of about $27,000. And we took that balance and we looked at their financial statements. And that balance differed by about close to $1 million. The financial statements that everybody had seen looked very healthy. But what the truth was over that 1-year period, this gentleman had systematically stolen, embezzled almost $1 million from this group. And how did he do it? And how did he do it so quickly? And how did he do it without being detected? So what he did was, the first week that he was there, he brought his mortgage. He had 2 properties. He had 2 mortgages. He brought his mortgage payments in with him to the company, and he redirected the online payment from his bank to the mortgage company to their bank to the mortgage company. So the first of every month, since the first month he was there, that company paid 2 of his mortgage payments that totaled about $5,000 a month. The first day of every month, those wires went out. If anybody had looked at that bank statement at all, one time, one day during the year, somebody would have seen that. I won't blame the accountants that were in there before us, but they really were asleep at the switch, I think. That was the first thing he did. The second thing he did was buy automobiles by paying cash from this bank account to auto dealers. So he bought, I think, 2 or 3 cars. He had a motorcycle and maybe another motorcycle, and he had a mobile home. He bought a mobile home out of this account. Now, again, and a mobile home was a $100,000 purchase. Nobody looked. Nobody paid attention, because every month they got a statement that said, hey, you've got $400,000 in the bank. Next month, you've got $500,000 in the bank. And all the doctors were high-fiving and backslapping and everything else because of how well they were doing financially. Imagine that first meeting I had with a group of doctors. There were 25, I'll say, and I only knew 3 of them. Imagine those other 22 doctors when they saw me, and my first meeting with them was to let them know that they had been embezzled by $1 million, and nobody knew it. A lot of them asked who the hell I was, because in that situation, that CFO hired us as the accounting firm to come in, thinking that we had some relationship with the CFO, who we never knew up until that point. But there was an extreme credibility gap at that point, because these guys had to buck up $1 million to get this company back to where it was. They gladly, they were very profitable, which was nice. So they were able to recover over the years. But the amount of theft that went through here was so significant, and it was almost daily, to a point where we actually questioned the bank, and we talked with the medical practices attorneys to see if the bank had any kind of liability in this, because the bank just sent these payments without anybody from the executive board of this doctor group signing off on it. Never asked a question. CFO came in, told them where to direct the payment. They directed the payment. Never asked the question. Buying cars and buying a mobile home and things. Always the explanation was for one of the physicians in the practice. And we just found this to be just absolutely an insane lack of everything in this practice. Now the practice still around, still doing well, pays their accountants a lot of money to come in and make sure that they're doing well. And there's a lot of oversight being done in the practice so that this could be prevented from recurring. That was a very sad situation for a lot of people who really thought they had made this profit and were looking to enjoy it, but they didn't.
It's crazy.
Yeah, we've had bookkeepers open up bank accounts in the name of the company with the corporate seal and the signature of the physician. In one situation was the bank was sold, so they had to open up all new accounts. And when the bookkeeper went in to open up the accounts on behalf of another medical practice, she opened up one extra account. And that extra account, of course, was the one that she got checks for and was writing checks for. She had the doctor who ran the practice, she had his stamp, she had the corporate seal, she had everything that was needed in order to open bank accounts, except the doctor's permission to open up this extra account. And the only way he found out about it was that there was a payment made from a insurance company in Vermont that came through on a 1099 form at the end of the year. And as the doctor was looking through the 1099s, he said, I never got a check from this company. And he sent it to me. It was like $1,000 or something. He says, I never got a check from this company. Why would they send me a 1099? We had no idea. So we actually went back to the company and asked them to reproduce the check. They reproduced the check. It was signed with his stamp, and there was the bank account number for the account that she had opened, the extra account. And we went back and found out it was hundreds of thousands of dollars that had been moved into this account by her just stamping checks and depositing them. Very sad situations in all of them. And these are trusted employees, typically, who are they're thieves. So that's the point. I don't know if you ever put in there, how do you spot a thief?
Yeah, I know.
I don't know. I don't know if there is a way to do it. But
a lot of times, like one of the, if you have employees who like are controlling, or they're not taking vacations, and they seem to be living beyond their means. Sometimes that's a red flag for theft, or they have financial difficulty, or they're complaining about inadequate pay. Like these could be red flags for some people are committing fraud, and not all of these people that might be complaining about their pay or expressing financial difficulty or stealing either, but they're just things for you to be aware of, when you're in your business.
it was interesting. One of those bookkeepers that worked for the medical practice was a single mom, lived a very normal lifestyle. You could never tell that there was any money accumulated. And we found out one of the things she did was on the weekend, she used to chaperone trips for senior citizens to Harrah's Casino. And here they found out later that on those weekends she was dropping between 5,000 and 10,000 at the casino.
Wow.
And her disguise was she was chaperoning these trips. Yeah, so the money does go somewhere.
Yeah.
Nobody saves it because they know if they get caught, they got to pay it back. So it's spent. Yeah.
So in this case, with the Berwyn firm, I didn't tell everybody how she got caught. So she got caught. She was leaving. She was retiring, but she billed the company 2 more invoices. And the person who was replacing her questioned it. And that's how she got caught. Now, this woman built herself a nice little vacation home on the Chesapeake with her embezzlement. So, there's always ways that you can improve your internal controls, or, as I say, trust but verify. So here's some ideas for you to help protect you from fraud. Perform an internal control assessment. So the definition there's 3 main types of internal controls: detective, preventive, and corrective. And they're really policies and procedures that you implement to prevent problems and protect your assets. Examples: segregation of duties, reconciliations, policies and procedures for the different aspects of your business. Again, review your bank statements. I cannot stress this enough. Understand what revenue should be coming in, what expenses should be going out. And then have account reconciliations for your balance sheet accounts. Most of our clients all of our clients that we perform accounting for, we do balance sheet accounts, and we do reconciliations for significant P&L accounts, including sales and payroll. One of the ways we do accounting for a medical practice, and the process is when the person checks out at the medical practice at the front desk, the information gets put into their medical system, and then the practice manager is supposed to compare the receipts that day to the appointments that day to make sure that there is a deposit for everybody that came through. Then that deposit gets sent to us and we record it and we do the bank rec. Well, just in October, we were doing the bank rec and the accountant came to me and said, I'm missing a $3,200 cash deposit. And, my heart sank, of course, and I'm like, okay, well, we're going to find it. So I called and I said, somebody needs to find me a $3,200 cash deposit because we don't have it. It's not in the bank. It's on the sheet. And here it was stuck in the back of their safe where they keep the cash. So now there's two things. They really forgot about it, or somebody was testing us to see how well we were performing our job. The practice manager really should have caught that, but there was a second layer of checks and balances, and we caught it. The practice manager should have caught it when she reviewed the deposit that day and was looking, she should have had a deposit slip for that $3,200. So it's always good to have checks and balances. The other thing we have when we do payables is we have somebody who issues the check, somebody who's signing the checks. The checks are locked. Nobody can get them. The person who signs the check cannot get to the locked checks. And then somebody else is doing the bank reconciliation. Somebody else is reviewing the bank statements. So there are good ways for you to segregate duties as much as you can, but also, again, I can't express the importance of reviewing your bank statement and preparing account reconciliations. Know your vendors, know your employees, review your payroll, and ask your payroll company to provide you with a monthly change report. We had a client where the employees who were leaving were not being terminated by the payroll processor at the company. What they were doing, they were actually redirecting their payroll into their account. So if you had a payroll change report, you would see that this person did not get terminated, but their bank account changed. So it's really, and even if you reviewed the payroll report, you would see that this person is still on your payroll. So I can't just, if there's nothing else you do, review your bank statement, review your payroll. And then also check your insurance coverage. The one case that we worked, fortunately, most of the theft was covered by their employment theft coverage or their business loss. So talk to your insurance provider, see if you have coverage in case of theft from one of your employees. And then also make sure it includes a reimbursement for a forensic audit. So you should want to make sure you have reimbursement for an audit as well as damages from the theft. And just know that financial statement audits don't always catch fraud. In the report to the nations that we referred to, provided by the ACFE, 83% of the victim organizations they studied had an external audit of financial statements. The mechanism of an audit is not primarily designed to detect or prevent all frauds. So a lot of times, if you're not sure of your internal controls, you can always reach out to your accountant for ideas on how you can protect your business. And really, that's all I have today. I hope we've been able to help you and educate you.
There are a couple questions that were in the
Okay,
Q&A.
and we have some questions, so we'll get to them. This is our contact information if you wanted to reach out to us. So let me see how I can get to the questions. All right, questions. Do you recommend that bank statements go to the owner's homes? Yeah, I mean, that's the one medical practice that we have, the bank statement goes to the doctor's house. It's a single practice practitioner, but the bank statements go to his house. And then also, yeah, having a lot of credit cards can be a problem. You should really review your credit card statements as well. In the one case in Chester County, the township, there was a lot of credit card charges that were personal charges being paid by the township. In the one case that we Andrew and I had worked on, the person was using Amazon and charging it to the company. And there were a lot of Amazon charges that were being paid by the company, but shipped to the person's house. So just be aware of your expenses. I can't tell you how important it is to look at your bank statements, look at your credit card statements. And we will provide slides after, we'll post them on our site. So we'll make sure everybody gets them. But thank you very much. Again, here's our contact information if you have any questions. Unfortunately, we have a lot of experience in this area, but we also have a lot of experience in helping you to prevent it. So before you become a victim, you might want to reach out and see what we can do to help you. And thank you very much for your time.
Thank you.